Hello friends, I'm back with your next revision lecture. ICA has released this booklet on MCQs and case-based scenarios for auditing and professional ethics, which is our paper 3 of CA final examinations. Daily, I'll be revising you 5 MCQs from this MCQ booklet of ICAI. Come, let's start our first MCQ. PMP Limited is an associate of PMP Inc., a company based in Kuwait. PMP Limited is listed in India, having its corporate office at Assam. The company's operations have remained stable over the years, and the management is looking to expand the operations, for which the management is considering different business ventures. The company's auditors issued clean audit report on the audit of financial statements for the year ended 31st of March 2019. For the financial year ended 31st of March 2020, the auditors made some changes in their audit team. While the audit partner remained the same, the field in charge has been replaced, as the field in charge who was engaged in the audit for the financial statements for the year ended 31st of March 2019 has left the firm. The audit team has a new person as external quality control reviewer EQCR, who has specialized knowledge of the industry in which the company is operating. EQCR has been employed in the firm for over 2.5 years and is yet to clear his chartered accountancy final exams. The changes were made on the basis of consideration that the firm has enough experience of the engagement with this client. So it is till here it is saying that there is a change in the EQCR position as compared to the last year, and the new person who has been employed as an EQCR has not yet cleared his CA final examinations. So let's go beyond this. The audit team commenced the work for audit of the financial year 31st of March 2020 after detailed planning, and it was observed that EQCR has various comments on certain matters which were not accepted by the audit partner. Audit partner had better understanding of the client, and after assessing the comments of the EQCR did not find those relevant. The audit partner, without concurrence of the EQCR, finalized the audit and issued the audit report. So here what happened? EQCR has made some comments wherein the audit partner is not agreeing to those points, and audit partner finalized the audit without considering this EQCR comments. In the given situation, please advise which of the following is correct. So let's go through each and every option. Option A, the changes in the audit team were not appropriate except for the field in charge who had left the firm. EQCR should have been a member of Institute of Chartered Accountants of India, that is ICAI. It is saying that changes are okay but not appropriate except for EQCR. EQCR has to be a member of ICAI. So I feel this is the right option, and let us also confirm with the other options also, and we'll finalize. The audit partner did the right thing by ignoring the comments of EQCR, as he is of the final authority to decide on any matters and take decisions. Further, EQCR was junior to the audit partner. It doesn't matter when you are in a statutory auditor position whether the person who is conducting the audit and the person who is making comments, and especially that is of EQCR, you should not see whether he is a junior to you or senior to you. So this option is not appropriate. The next third option, the audit partner must discuss each and every comment of EQCR with the client and ensure that the proper disclosure in respect of those points should be made either in financial statements or in audit report. Either in financial statements or in audit report. How can he decide in any one of this it should be disclosed. So this is also not an appropriate answer. And the next last option is EQCR had sufficient and appropriate experience. He should have been given the authority to objectively evaluate various matters before the report is issued, and significant judgments the engagement team made on the conclusions they have reached in formulating the report. By ignoring the comments of EQCR, audit partner took additional professional responsibility on himself. By considering the comments of EQCR, he could have passed the responsibility to EQCR. Whenever an auditor is doing a statutory audit, there is no limitation, or he cannot even pass a single responsibility to the others. So merely because he has considered EQCR's report, that doesn't mean his responsibility is reduced. So even this option is not appropriate. The correct answer and the correct option is changes in the audit team were not appropriate except for the field in charge who had left the firm. EQCR should have been a member of ICAI. So option A is correct. Let's go through the second question. VKPL and Associates, a firm of chartered accountants, have been operating for the last 5 years, having its office in Gurgaon. The firm has a staff of around 25 persons with 3 partners. The firm has been offering statutory audit, risk advisory, and tax services to its various clients. The major work of the firm is for the taxation services. The audit partners also discussed that the firm needs to work significantly to improve the quality of services they offer, and that would also help the firm to grow in its business. Considering this objective, the firm started training programs for the staff which were mandatory to be attended. During one of the training programs on quality, a topic was discussed regarding the information that should be obtained by a firm before accepting an engagement with a new client, when deciding whether to continue as an existing client, and when considering acceptance of new engagement with an existing client. It was explained that the following points may assist the engagement partner in determining whether the conclusions reached regarding the acceptance and continuance of client relationships and audit engagements are appropriate. So here what happened is, this firm VKPL and Associates, a chartered accountants firm, is planning to improve the quality of work, and hence they have started some training programs for its employees. And it is saying that the following points which we are going to read are to be considered while accepting a new engagement with existing client, or continuing the existing client, or you are accepting a new client and new engagement. So what are those points which this firm is considering to be appropriate? The integrity of the principal owners, key management, and those charged with governance of the entity. Yes, this has to be considered. The qualification of all the employees of the entity. This doesn't make sense, because you should not judge whether the person's qualification is appropriate to his job role. So it is up to the management whether they appoint any person. You need to accept. That doesn't matter to you. So second option is not relevant for us. Whether the engagement team is competent to perform the audit engagement and has the necessary capabilities, including time and resources. Yes, this has to be considered, because after accepting an engagement, you should not see, or you should not bother about the time and the resources that are available with you. So even this has to be considered while assessing whether to accept an engagement with the client or not. The remuneration offered by the entity to its various consultants. So even this doesn't matter, because you should not provide services based on your fees. So 1 and 3 are appropriate. And then fifth one is whether the firm and the engagement team can comply with the relevant ethical requirements. Are you complying with the standards of auditing? So even this point has to be considered, because standards on auditing says that you should be an independent auditor and you should not be related to your client. So ethical requirements has to be considered. significant matters that have arisen during the current or previous audit engagement and their implications for continuing the relationship. Whatever may be your previous experiences with the client, even that should be considered. So which options are appropriate for deciding whether to continue or accept a new or existing engagement is 1, 3, 5 and 6. So the question is asking, we would like to understand from you which of the above mentioned points are relevant for the topic under discussion. So what we have decided, 1, 3, 5 and 6. So option D is correct. Let's continue with the next question. GOV is a private limited company engaged in the business of mining. The company's operations are fairly large and its turnover is 4,000 crore rupees on an annual basis. Due to the nature of business and the size of the company has appointed a firm of chartered accountants as its statutory auditors who have the relevant experience of the industry in which the company has been operating. During the course of the audit of financial statements for the year ended 31st of March 2020, the audit team had various observations which resulted in many adjustments in the financial statements of the company, and that was also appreciated by the CFO of the company. At the time of final reviews of the audit team, the audit partner requested working papers on final analytical procedures from the engagement team. However, the engagement team explained that they performed substantive testing processes which also resulted in some adjustments, and the same was incorporated in the final set of financial statements given to the audit partner for the review, and accordingly there was no need to perform final analytical procedures. Audit partner was not convinced with this and requested the engagement team to perform this procedure. Considering that the timeline to conclude the audit was approaching, the audit partner also requested the CFO that the audit team would need some more time to perform final analytical procedures. CFO was very impressed with the engagement team and agreed further time. But he also told that the audit partner that the work of the team was excellent and hence the audit partner should avoid these additional procedures. So he's saying you should not perform because the engagement team is very good. You are requested to give your view in respect of this matter as per essay 520. Let's go through each and every option. The explanation of the audit team was correct. After doing substantive testing, which also resulted in audit engagements, there was no need to perform final analytical processes. Is this correct? Just think, merely because the substantive processes resulted in final adjustments in the financial statements, that doesn't mean you should not perform the final analytical procedures. So this option is wrong. The second option, the suggestion of CFO should have been considered by the audit partner, as the CFO was observing the work of engagement team and hence he could assess that better than the audit partner. How will he decide the capacity and the responsibility, whatever it might be, of the engagement team better than the audit partner? Because the audit partner knows which kind of work has to be performed and what kind of risk he is going to undertake. So even this option is not correct. The requirement in view of audit partner was valid. The conclusions drawn from the results of final analytical procedures are intended to corroborate conclusions formed during the audit of individual components or elements of final financial statements. So this option seems correct. No, it has to be correct because the audit partner is saying here the option itself is explaining you that final analytical processes, whatever it might be the results of final analytical processes should match with the results of substantive processes performed on individual component basis. So this option is correct, even though we'll go through the next option also. The audit team did the right thing by not performing final analytical procedures. By going through this line itself, you should understand that this option is wrong. Okay. However, one additional procedure in that case should have been given. Obtain the document containing the analysis performed by the client on financial statements. This document is required to be assembled in the final audit file. So this option is wrong. And the last but not the least, no, sorry, last but one question. BDJ Private Limited was established in 2001, and since then the company's operations have grown significantly. The company is based in Kanpur and has branch offices outside the Kanpur. The company is engaged in tours and travels business, and because of the nature of the business, it has voluminous transactions. The annual turnover of the company is 700 crore rupees. During the audit of financial statements of the company for the year ended 31st of March 2020, the auditors observed wide variation in various details of sales and various expenses as compared to last year. Various balances of trade receivables, loans and advances, statutory liabilities showed significant increase, and many balances were found to be non-moving which were aged for more than 3 years. On the basis of the materiality and planned procedures, the audit team requested the client for testing of various samples for sales, expenses, etc. The client observed that the number of samples that the team has requested increased as compared to last year, and asked them to cut down on the number of samples so that the same number of samples which were tested in the previous year. The audit team did not agree with this and explained various factors which the team has considered for sample selection and the reasons for changes in the samples, and also explained the requirements of SA 530 to the client, but the client still did not agree. Now, there is a situation of deadlock, and you are requested to provide your guidance to resolve this matter. So, what kind of a guidance we can give from the below mentioned options? There are 4 options given to us. Come, let's go through each and every one. The argument of the client is not valid. Sample selection is based on certain principles as per SA 530, and that is on the assessment of the audit team. It may change year on year, and hence the client should provide the required information to the audit team. Yes, this option is absolutely correct, because the number of transactions, the volume of transactions that the auditor is going to audit, and the financial statements he is going to audit will change year on year. The materiality level will change. The risk that he is undertaking will also change, and therefore the sample selection will also change on year basis, because you need to assess your risk materiality each and every time when you are auditing. So option A is absolutely correct, but still we'll go through the other options also. The explanation of audit team is not valid. Referring SA 530 was not correct in this case. The audit team should have explained their entire approach around risk assessment to the client before starting the fieldwork, and should have formally shared that with the client in writing. So this is explanation of audit team is not valid. No, here the explanation of audit team is absolutely correct. So this option is wrong. In the given situation, the audit team, instead of getting into too many arguments, should cut down the number of samples and should increase their processes around analytical work. That would resolve the problem. So merely cutting down of samples as because client is not accepting, that is not the correct solution. We'll go through the last option. The audit team should make a formal request in writing for these details from the client, and if the client still refuses, then they should report this matter to the audit partner. In that case, the auditing standards require audit partner to check some of the documents which may not be provided by the client to the audit team. Checking of some of the documents, will that eliminate the entire responsibility on the auditor? No. Hence, the option A is correct. Last question for the day, last MCQ. SKJ Private Limited is engaged in the business of construction. The company has also got some real estate projects few years back on which it started the work in the last 2 years. The annual turnover of the company is 600 crore rupees and the profit of 40 crore rupees. The statutory auditors of the company got rotated by another audit firm due to mandatory audit rotation requirements as per the Companies Act 2013. The new statutory auditors of the company started audit of the financial statements for the year ended 31st of March 2020 in May 2020. The audit team also requested the client to provide certain information on the opening balances to perform their audit processes. Initially, the management did not provide any information to the auditors on the opening balances, thinking that this is not within the scope of their work. However, after going through the auditing standards, the management agreed and provided the required information. So here, after explaining things, management agreed for giving an information. Later on, the audit team also started requesting information for the period from 1st of April 2020 to May 2020. With this requirement, the CFO of the company got very upset and angry and set up a meeting with the senior members of the audit team. CFO raised a concern that the audit team has not been doing work properly and has been asking for unnecessary information like information on opening balances and then the information for the period after 31st of March. The audit partner explained to CFO that everything requested by the audit team has been as per the auditing standards. However, CFO said that the earlier years, the previous auditor never asked for such information. You are requested to give your view in this matter. So, client is saying the previous auditor has not asked. You should also not ask this kind of information. So, what are our views on this question? We should give in a simple one short answer from the four options that are given to us. Option A, the requirement of auditors of opening balances was valid, but for the period after 31st of March is completely wrong. Is that wrong? No. You should consider the events that are occurring after the balance sheet date. Is wrong as that it is out of the scope of their current year's audit. They can ask for those details during the audit of next year. So this option is wrong. And then the concern of CFO was valid. He has seen previous auditors not performing such audit procedures, and hence the new audit team should also follow same approach which was followed by previous auditors, as that would lead to efficient in audit. So because the previous auditors has not performed a few of the procedures, it doesn't mean that you should follow him. So this option is also not correct. Option C, the audit team should set up a meeting with previous auditors wherein it should assess why different approach was followed by the previous auditor. On the basis of that discussion with the previous auditors, next course of action should be decided. It is not your business because previous auditors know how it should be done. Now it is not at all required to set up a meeting, why this is not done, why that is done. So this is not correct. So option C is also not correct. We had our final option. The requirement of auditors for opening balances as well as for the period after 31st of March 2020 is valid. After the requirements of SA 510 and 560, audit team is required to perform these procedures. So option D is correct. Hope you are clear with these 5 MCQ questions which we have discussed today. We'll meet again in the next class starting from MCQ 6 and we'll end at MCQ 10. Hope this video is helpful to you, and if you find this video useful, please do like, share and subscribe. And share with your friends who are in need and help them to revise quickly. Okay then, bye bye.